G'day, Internet. Max right here, and we've got time, I believe, for another fun update with one of our favorite guests, Juan Villaverde. Juan, thanks so much for joining us.
Max, great to see you again, my friend.
Yeah, really good to see you too. I don't know about you. For those of you at home, we got on the call. Usually we chat for 10 minutes beforehand because we just like so much to catch up on. But this time I was like, no, there's too much fun stuff to talk about. Let's just hit record. So I barely chatted to Juan. So let's. I just want to start off with. I'm starting to get very, very excited about the next 6 months. That's just, my uneducated nonsense opinion. You tell me the real opinion. What are your charts revealing?
Hey, my opinion is just as good as yours, Max. My charts are telling me that I don't know if we talked about this last time we chatted. I did say we're coming to a low very soon. I believe we spoke in March and Bitcoin made a new low in April. So I know for a fact we didn't talk after the low was made.
Okay.
It didn't matter really because liquidity, global liquidity has been moving up for months now. It's been moving up all year, interestingly. So since mid-January, it's been up and up, and it has not shown any signs of slowing down. Now, liquidity works with a 3-month lag. So after 3 months, if you have a bottom in liquidity, 3 months later, you should look for a low in crypto. You have a bottom in liquidity mid-January, you should look for a low in crypto sometime in March or April. Been writing that to in my services for for the better part of 6 weeks. Now we have the low. I did think, and I don't know if I said this on your show or not, but I did think the low was in March 11, because my timing model, my forecasting model had showed two possibilities for this low. There was one on March 11. We do have a low on March 11, but then we had another forecast for a low April 7, and that was the final low. So we have a kind of a double bottom formation, but technically speaking, Bitcoin did dip into a new low after Trump's Liberation Day announcement panic, if you can call it that. And now we're moving higher, which is what liquidity was suggesting all along. If you just look, like I said, if you looked at a chart from 2025. So what does it point to? What does liquidity point to? Well, it points to a rally until at least, I would say, for the next 3 months. And so at the very least, we're looking at a rally into July. Now, the question to me is not whether or not Bitcoin's going to rally. I think that's pretty much a given. When both my model and the liquidity picture line up perfectly as they are now, you pretty much always get a rally. So it's a given. We're going to continue to move higher for the next few months, at least. Now, I'm waiting to see what liquidity is going to do in the second half of the year, but you can ask me about that later. The question to me is how big is this rally going to be? How high is Bitcoin going to go? It's not really about is it going to go or up or not. It is probably. I'd be shocked if it doesn't. But how high? Is it going to go to 200,000, 150,000, or does it stop at 110, 120? Actually, I can't quite answer that question. At the very least, we should see 100K again, so 6 digits. That would be a lower high to the highs we saw in January. And honestly, based on this bull market, which I've said on your show many times, I think it has been disappointing. Even so, we should expect Bitcoin to double from that low on April 7th. That double bottom was at around 80K. If you double that price, which is the least we should expect, that's the least Bitcoin has done in this bull market. In past bull markets, it would do a lot more. But in this bull market, it at least doubled from that 80K low. That puts the high at 160K. When? Well, anywhere between July and, if the 4-year cycle is any indication, between July and October, we should see that high, 150. Let's call it 150K because it's a nice round number, rounder than 160K. And that's the outlook. That should be the outlook. That is my base case. There's a lot that can go wrong. I am starting to be concerned that the stock market doesn't look healthy. Bond market doesn't look healthy. We need the Fed to cut. I think that's going to give a massive boost to this crypto bull market. If they don't cut, if Jay Powell decides to be stubborn because he doesn't like Trump and he wants to play politics, that's what it feels like he might be doing. Or maybe he doesn't want to be the guy who cut rates into an inflationary spiral because of tariffs or whatever. If you look at markets, tariffs are clearly deflationary, not by their very nature, but in this context, those tariffs are going to sink us into a recession, meaning they're recessionary and deflationary. So the Fed should be more proactive. Again, you can ask me about that later. I don't think they're going to cut, though. I doubt that they will. I have questions, Max. I have questions. So it's not whether or not Bitcoin goes up between now and, say, Q4, Q3. It's how much. It's how much does it rally? Yeah, 150,000 is my base case. It has been since the start of this bull market, 160, 150K. I got a little excited there. Q1 last year, March, February 24, it was like back to the good old days of nonstop rallying, but that effectively ended in March of 24. Ever since, we've had a lukewarm bull market, and now we're in that final leg higher in that bull market. You can split the 4-year cycle, the massive grand 4-year cycle in crypto. You can split it in 4. You usually get 3 large moves, 4 actually large moves higher. We've had 3 already. This is the final one. So this is the final leg up. In the past, it was the best. In the last bull market, it was the worst. That means the bull market from 20 through 2021, 2019 through 2021. That was the worst. The final leg up was the worst. That was the double top at 70K. This one, how good is it going to be? Well, I think it's going to be much better than 2021 for sure. But again, I'm cautiously optimistic, I guess. That's how I want to wrap it. It's going to go up, but how much? I don't know.
Gotcha. Okay, so we're in agreement. It goes up.
Mhm.
And when you say base case, I believe that you mean, is that the worst performing case or is that the most likely case?
Yeah, base case is what I expect. This is what I'm expecting.
That's
If
the
you ask me
most.
what I think is going to happen, I say 150,000 by October, November at the latest.
Okay,
Yeah.
150,000.
Mm-hmm.
80.
It's not much.
Yeah, I gotta say I'm more bullish than that.
Oh, hey, listen, I would be super happy. I'll be glad to be wrong. I want to be wrong on this. I wanted to go to 300K. I'm loading up already. I'm a third of my position deployed. I will deploy more on dips. I want to ride this thing higher. Absolutely. Uh, I just want to keep my expectations in check.
Yeah, well, that's always a good idea, isn't it? But yeah, no,
Yeah.
I think, but I do agree with you. There is a lot of uncertainty here,
Hmm.
I think a good chunk of my more bullish case is a confidence and faith in a few things happening that is Trump administration related. Like I do,
Okay.
yeah. So I mean, number one, I think the tax cut package is going to be a huge relief to the market, and they're gonna get that. I think that because that should offset any of the inflationary concerns. If domestic wages go up by 10, 15, 20% because of tax cuts, then that effectively negates inflation of 10, 20%. So it's a pretty huge thing that can happen in terms of the tax cuts, right? Number one, I have faith that that's going to do. I think that one's a very, very likely one. I think a likely, but I'll refrain from the very, very likely, but a likely scenario is that the tariff things are resolved fairly soon. I think they could be, Trump administration is kind of talking about 90 days from like start to finish for at least a majority of the trading partners, probably not China, but the others. And I think that's actually probably a pretty good time frame. So I don't know. Some people might say that's optimistic. And if those two things come in, combined with I think the liquidity cycle, combined with the 4-year cycle, combined with where I think we should expect stable currency legislation in the
Hmm.
US here probably within the month. Hopefully, Bitcoin legislation within kind of 3 or 4 months. All those kinds of things take place. That all adds up to something very, very, very exciting to me.
All right, let me just say, if all those things come to pass, I would agree with you. I would agree with you. I think it's bull market on again, and 150 is at the least it will go. It probably goes to maybe a quarter million. It's a lot of ifs, though. I mean, we're depending on a lot of things. Right now, the way things are looking right now, with the tariffs are already in place, that's pretty deflationary. I mean, this guy is axing world trade. That's not good. If he doesn't backtrack soon or does something soon, the damage may already be done by the time he says, okay, you know what, f those tariffs, we're gonna bring them down, or here's all the deals it made. I am particularly worried about China because you said maybe China is spared from this. Maybe there's no deal with China. Yeah, that's the thing. There's two economies in the world that drive crypto bull markets. That's China and the US. That's basically it. Those are the their central banks are the ones that pump the most liquidity into the market. The thing I'm watching the most, and I will be super bullish if this happens, is if there's some type of deal between the United States and China that allows the US dollar to get materially weaker against the yuan, which would allow the Chinese to print without causing massive inflation in their own domestic economy. The Chinese need to print 2008 style, just like they did actually back in 2008. They are facing they're facing a complete deflationary collapse. The reason they're not able to unleash the money printers is the yuan is too weak. The reason the yuan is too weak, dollar rates are too high. The dollar is too high. And the thing is, it's really the Fed that needs to come to the table. Those dollar rates need to come down, combined with some type of deal between the Trump administration and the Chinese Communist Party, which I think that's what both of them want. Like, I think Trump wants a weaker dollar. They've said so many times. So do the Chinese. The Chinese want exactly the same thing. So why can't these two parties come together and come to some type of deal? Now, I'll say there's a very good chance that's exactly what happens. And I mean, we start steamrolling higher. That could happen. The problem is if it doesn't happen, then we're looking at more weakness and just more of a lukewarm type rally. I think macro is very important here, and not just liquidity is really what happens between China and the United States. And yes, I see a lot of people who are very hopeful that a deal is going to be put on the table and signed by both parties soon. If that happens, color me bullish. If it doesn't happen though, and it takes long, like it takes longer than people expect, they sign a deal within 2 years, it's gonna get pretty bad between now and then. So it's like we don't have a lot of time, in my opinion, because the more this uncertainty with tariffs and trade lingers, the bigger the probability that whatever rally we have in crypto is weak at most, anemic. So yeah, I'm watching the same thing, and I do think that a deal may be put on the table and agreed upon by both China and the States. But if they don't, uh, because whatever reason, then we don't have a lot of fuel in this rally. And I worry when you need something to happen that you just have no control and no certainty over. Like, we don't know that this is going to happen. We suspect that it might, because that's what happened last time. Last time Trump was president, there was a deal. But this is it's more dramatic, I would guess. And we are looking at the end of that 4-year cycle here in 2025. That 4-year cycle is not just in crypto. You and I spoke about this many times. This is a global macro cycle. It's about 4 or 5 years. It tops out this year. Now, usually on that 4th year, so when the cycle resets, we start with a bit of deflation. Now, last time was 2022. We had some deflation, but we had inflation and then deflationary forces. People say we had a recession in the first 2 quarters of 2022. We're looking at something similar this time around in 26. What's going to cause that? You need to start looking for causes. Last time in 2021, it was obvious. Inflation was raging higher and the Fed was printing tons of money. It was obvious that, and I remember telling a lot of people back then, like, they asked me, like, when do you think the bull market ends? And I said, the bull market will end when the Fed starts hiking rates. They're going to start hiking rates at some point, possibly by the end of 2021. What ended up happening is they announced rate hikes in late 21 that killed the crypto bull market. The actual hikes came in March. By then, the market was already pricing them in. What's going to happen this time? What's going to happen this time to cause that downturn in that 4-year cycle? I think it might be trade related. It might be something with trade that just disrupts the global supply chains, kind of like what we saw during COVID, but not nearly as bad. That's what I'm looking at, actually. So I'm not sure. I would say you're more in the consensus. You expect things to work out relatively quickly. I think they might drag on a little longer than most people expect, and that's going to make that's going to be the recipe for the next downturn. It's just a worry, really, and I think it's more likely than people suspect. But I agree with you. I mean, we could be looking at a raging bull market within the next 3 months or so.
So that's interesting that you think I'm in the consensus that things are going to work
Hmm.
out quickly and on time. So that's interesting. I would have thought the other. I would have thought there's a little more fear around that. Um, all right, very interesting. Um,
There is a lot of fear. I guess it's a consensus among the people that I listen to. Like I listen to a lot of global macro, Raoul Pal, liquidity people. Everybody in the liquidity camp, they see like I do. I'm a bit of a liquidity trader myself. I see liquidity going up. I see it like everybody else. That's why I think, yeah, we're going to see a rally within the next few months, just because it's already working its way into the market. You're seeing it right now. What happens, however, is maybe starting next month, liquidity takes a nosedive because trade collapses and people, and liquidity begins to contract as a result of that because trade backs and those trade surpluses that other nations have with the United States, that fuels their dollar reserve. That is actually how they get their dollars. So a lot of the global liquidity that flows through the world comes from trade, and it comes specifically from having trade surpluses with the US. The US exports dollars to the rest of the world. If they axe that for whatever reason, let's call it political, that's going to have negative consequences in the near term. I'm not saying that over the long run, it's not something that the world needs. It probably does. We're due for some type of rebalancing with world trade, but don't think it's not going to be painful. If Trump really means it, it will be painful, no matter what he says. And I've watched a lot of politicians that I love. Milei is one of them. He kept saying, "Yeah, I'm gonna do all of these reforms. Don't worry, it will not be painful." It is. Reform is painful. Sorry, everybody. A politician, including Trump, cannot say that because then nobody votes for them. But adjustments are painful, even necessary ones.
yeah, I do agree with that. I completely agree with that. I've always said that yes, Trump will be downplaying the downside, and it
I always do.
just and he needs to. Yeah, and even Malay's a great example. Like that, they really hurt for a year. It seems to me they're coming out of it now,
Mhm.
but they ripped the Band-Aid off hard, and it hurt for sure. So
Yeah.
and then yeah, so that all of those things I completely agree with. So now let me throw this hypothetical at you. Let's say we don't get trade deals. Let's say the news is pretty negative all the way through until the end of the year. Can do you throw the 4 year cycle out the window and the liquidity cycle out the window, and then next year is bullish, like 2026 is bullish? Or is this just, it's like, no, you had your chance. This is the fourth year of the 4 year cycle. You missed your chance. You screwed up Bitcoin. You got to suffer for another 4 years. Maybe you'll make it up 3, 4 years from now. What do you think?
I think that the fact alone that technically we already set the high in 2025, although it was way too early. We already have the all-time high set on January 20 of this year. So technically, all we need is a slightly higher high in order by Q3, Q4 to fulfill the 4 year cycle. What I'm trying to say is, if Bitcoin, let's say it treads some water here for a few months, which I'd be shocked to see because liquidity, like I said, has been moving higher. So it shouldn't do that. But let's say it goes to 120,000. Goes to 120,000. Nobody's gonna be celebrating that. At least
Yeah.
no. Nobody's going to be celebrating that. And yet, technically, that is a new all time high. If we get that by June, let's say, or July, that does fulfill the 4 year cycle. The first 4 year cycle top, it took place on, it was June of 2012 or 2011. I think it was 2011. June 2011. That's the first ever Bitcoin 4 year cycle high. So we could see it in June. Now, it would be unusual. Usually we see it in Q4. So usually the high, and I mean, every other time since 2011 has been the period between November and January of the following year. That's usually so Q4. Q4 is when we see the 4 year cycle top. I think we should expect the same thing this time around. However, if all the things you said come to pass, there's no trade deal, trade collapses, supply chains collapse, liquidity takes a nosedive, then we're looking at the 4 year cycle high coming in early. It would come in July, June. And from there, we would have potentially a longer bear market than usual, but maybe not. Maybe it's 12 months from that hypothetical June, July top. So we're looking at the bottom being June, July 26. And so the next cycle would start earlier and possibly extend longer. Because if I'm right, and no, I'm not right. I don't want to make that prediction, but if there is no trade deal, if liquidity nosedives, there's no deal between China and the United States, and the economy goes into recession, and I mean the global economy, if it goes into the recession, then this next crypto bear market is going to be pretty bad, which means the next bull market is going to be pretty good. Why? Because they're going to have to print. Remember, Jay Powell will probably leave his position next year. The new Fed chair, which I don't know how it works exactly, but I think Trump will have some say in who's elected.
I mean, Trump
It's
appoints him.
gonna, yeah, the president appoints them.
Yeah.
There you go. So they're gonna appoint somebody who's gonna cut rates and print money because that's what Trump wants, and I think that's what Besant wants too. That's gonna weaken the dollar, increase global liquidity, and throw the world again into the the up phase of that macro 4-year cycle. And so the next bull market, I'm pretty excited about that one. This one, we will see. The reason I'm not so sure is because I think that as the world works out these new works out these trade imbalances and reworks those supply chains, I think it's not going to be 90 days. I just think it's going to be a year to 18 months before we even see some of the upside. That's going to be a bull market to be excited about. This one, I've said it before, it's been disappointing, and I just think, hey, why not continue to expect it to be disappointing? I mean, why is it going to turn around suddenly?
I think it's interesting if I know that they're constantly trying to turn the temperature down, saying it's not a trade war, we're just blah blah blah. But it's a trade war, and
Mm-hmm.
it's interesting in that with regards to China and our adversary in this trade war, they can have a unified front, and all elements of the army are fighting this war in unison.
Yeah.
And we have a system where is the Fed fighting in unison with the president in this war? Is he fighting
No.
against him? I don't know. And so what I would say is I have faith in Trump to this degree that he understands that it can be very painful before it can be good. He understands that it might be prolonged. He understands that a whole bunch of things, and he will have emergency valves up his sleeve. Now, what would be the easiest and most common sense valve is that the Fed prints and buys America some time to fight this war properly, etc. But if you've got the Fed working against you and you're not in control of that lever, then you have to have some other levers that maybe you can do. So if he sees America hurting, out of pure preservation, but I'd also say out of giving the troops the will to fight, you have to alleviate some of that pain. And I don't know if it may be in the form of a Doge check, or it may be in the form of just like some COVID measure. So we'll send out checks. Now that's going to be harder in post 2022, 3, 4 inflation.
Mhm.
And so, but in order to fight the war, because the narrative will change, right? And he will say, um, yeah, he will say, yes, this is a trade war. We've got X number of countries on board. China is being a stickler. They're being a stickler because of A, B, and C. We can outlast them if we do these measures, but you've got to give me the power to do these measures. And if we go down that path, there's going to be a lot of measures, and all those measures involve printing. And that means
Mhm.
liquidity goes up big. Now, in
Mhm.
certain sectors, like real estate or whatever, those things are just such a lag and there's such a long turnaround time. Those things can go down for a long time before they can go up. But in the Bitcoin world, those things bounce very, very quickly. I just look at the COVID bump. The world's shutting down, the world's coming to an end, price drops 50%. 6 weeks later, it's over. So if any kind of these doomsday things happen where there's no trade deals and things just suck, the response has to be shit tons of printing.
Yeah.
And I don't know. I think that Bitcoin is a very, very fast reaction to that, and so pain should be relatively short-lived. Is my thought. What about yours?
My thought is it really depends on whether or not I think the spotlight might move to the Fed at some point here, because I hear what you're saying and I agree 100%. The question is, can they pull on that monetary lever without the Fed? I think their options are limited, and the reason they're limited is because the U.S. is also running record debt to GDP, public debt to GDP. They have $9 trillion of debt that they need to roll over now in 2025, and on top of that, they have a record deficit. So deficits are too high, debt to GDP is too high, and they have trillions of dollars to roll over this year, which means they need lower rates. They need the Fed.
They need the Fed.
And Powell, I don't think he's in the mood to cooperate with the administration. That's what I'm seeing. I don't think he's in the mood to cooperate. The reason I'm saying that is because if you look at the economic data, and especially the forward-looking indicators, it's pretty bad. The Fed should be cutting. In
Yes.
fact, other central banks are cutting. Trump said that many times. Why is the ECB cutting but not the Fed? He actually has a point there. The Fed should be cutting. The reason they're not cutting, I think, is political in nature. They don't like the tariffs. They disagree with that policy, and therefore they do not want to cooperate. They don't want to ease the pain. Like you said, it should be a whole of government approach to fight this trade war. But the Fed is somewhere out there deciding that they're going to be the one that stands out and doesn't cooperate. The government needs the Fed. And I think the United States government, like the system, is decentralized enough. I don't think Trump can actually strong arm Jay Powell, not in the near term. He can fire him, or when his term ends, they can appoint this shadow chairman that they said they might appoint by October. They can do all of these things. But if they had to fight internally to fight this trade war, it's got to be bad for liquidity,
Yeah.
for the global economy. And then I believe, yes, we're in my scenario where the 4-year cycle high comes early. The bear market lasts just about as long as always, about 2 months, but it starts earlier. And I think that's the only daylight between your argument and mine is I think there's a very, very heightened probability that we have an earlier 4-year cycle high. Whereas I hear people even say, no, it's going to come in late. It's going to be in 26. I'm like, I just don't see that. I think we might have, the table is already, the pieces are already in motion. The board is already set so that we might have an earlier 4-year cycle high. Now, if I look at my timing model and the forecast for this year, it puts there's 3 potential dates for a 4-year cycle top. One is August, early August. The other 2 are October and November. So you can see that my model is already has been saying, because I run these forecasts in December of every year, and it has been saying since December last year, there's a high probability of a mid-year 4-year cycle high. It's probably going to happen Q3, Q4 as always, but there is a probability here. And as we approach the middle of the year, in June, July, August, yeah, I do see the possibility for an earlier top. That's all I'm calling for. And if we have an earlier top, Bitcoin's going to stop at 150, maybe lower. If we run into October, November, yes, I will be shocked if it doesn't go beyond 150. But things need to change. The way things are moving now, with the Fed holding out and not unwilling to cooperate, because like I said, it's not really about tariffs or trade wars. It's about the fact that the economy does seem to be sinking into recession, and they're not doing anything about it. Why are other regions? Do you think Christine Lagarde at the ECB is a fan of Donald Trump? No, but she's cutting rates. Why is she cutting rates? Because she has to. Why isn't the Fed? So that's what I'm concerned about. And I think Jay Powell has proven to be a very stubborn chairman. So I think just one man's ego may stand in the way of, or may actually be the catalyst for a recession. Just one guy who refuses to do the right thing.
And it's crazy when you think about this, but what it's going to come down to is perception and media and propaganda. And the media is almost willing and cheering on any kind of recession because they're not going to blame Powell. They're going to blame Trump.
Yep.
And then of course Trump's going to fight back, and it's going to be which one of these arguments is going to win. And the country and the world is so divided and so passionate with their beliefs already on Trump that it's like, well, they've already made up their mind. Anything that goes bad, some people are going to think it's Trump's fault, and then the Trump fans are going to say anything that goes bad is going to be Powell's fault, or China's fault, or anybody else's fault. And it's going to be very, very rough, very, very divided. It will be interesting, very, very interesting to watch.
And if you're having that argument to begin with, it's bad enough because it creates uncertainty, and that's really what causes recessions. Uncertainty, the psychology changes, it becomes suddenly pessimistic and cautious. That's what creates a downturn. So the fact alone that we could potentially be looking at a very public fight between the Federal Reserve and the White House, that alone is bad enough.
Hmm.
And I think if we start to see that, because we kind of saw that a few weeks ago, but if we continue to see an escalation to that argument or that debate, very public debate, that's going to hurt confidence a lot. And don't want to see that. You want to see a united government. We're not
Yeah,
really seeing that right now.
yeah, yeah, exactly. Ah, dear, dear. All right, fun stuff though. So I want to just go back and recap with some numbers. Um, is there any scenario in which you do not see an all-time high in our 6 month future?
Yes. The situation is even worse than I thought. If we don't see an all-time high, if we do not see an all-time high, Max, then things are bad. Things are bad. Prepare for the worst. It's going to be a bad bear market. So yes, I'm a trader. I always see that possibility. If I was 100% convinced of a new all-time high, I'll be 100% in on this market already. I'm only 30% invested. There is a possibility that we're all underestimating this situation. But I would say I'll be shocked. I'll be quite surprised if we see that because I'm a cycle guy at first and foremost. And yeah, we do have a January 25 candidate for a 4-year cycle top. That's way too early though. I even said back then when Bitcoin was undergoing its downturn because my model said, okay, prepare for the next correction. In early February, I got that signal. Late January, I got the signal. And I was shocked to see it. I was shocked to see the signal from my own model saying, hey, there's a downturn coming. And I thought, well, it's too early for this. It's too early to see this downturn. So I've been seeing these things because I have the cycle model, because I can see these cycles and how they play out before the next move happens. I was unpleasantly surprised to see that there was more weakness in the market than even I expected. Because remember, my model is agnostic to the strength and the weakness of a cycle. It tracks the cycle. When the cycle turns, it will say to me, the cycle has turned. Uh, when it forecasts this correction between January and April, I was I was surprised to see it. And that's when I started turning a bit more pessimistic because I said, well, this is kind of off cycle. We shouldn't be seeing this now. And yet we did. That's the last time I sold most of my holdings. I'm slowly re-entering the market now, but I went to cash.
Yeah,
It was February 2nd. I went to cash.
yeah. Okay, okay.
Gotta
Very
respect the
interesting.
market.
Most likely case, you're seeing a top later this year at 150-ish.
Mhm.
And outlier case, if everything comes good, we could push above 200, maybe to 250.
You see a deal between China and the United States. You see the yuan, that yuan dollar exchange rate go down because usually it's quoted in yuan in the Chinese currency. You see that go down, get bullish because it's going to surge.
So what does that mean? Which country is weakening? Which currency is weakening?
The yuan, the Chinese currency is, if you have TradingView for anybody watching this, if you have TradingView, the ticker symbol is USD CNY. Just look at that trading pair. It's currently trading around, just give me a second, I have it on my watch list. It's trading at 7.27. The pain threshold for the CCP for China is 7.3 through 7.35. It has been there for months. If there's a deal between China and the United States, you're going to see that exchange rate drop significantly. The yuan is going to strengthen against the dollar. It's going to go to 6, ideally, or the low sevens. If you see it below 7, which I'll be celebrating. You see the yuan go below 7 to the dollar, that's going to be a cause for celebration because that means the Chinese are going to start printing tons of money, and that's going to create the next bull market. I don't know if you've ever seen a chart of the balance sheet of the People's Bank of China overlaid on top of Bitcoin. It's like 1-to-1 correlation. These guys can't print. Bitcoin is weak. If they're allowed to print because there's a deal with the United States on the table, so-called I've seen it, I've heard it being called a Mar-a-Lago Accord, some type of accord. You see
Mhm.
some type of accord between China and the United States that involves the Chinese currency strengthening against the dollar, then yes, it's bull market back on.
Okay. Okay, good to know. All right, now before we wind up, Juan, you've got a really, really cool announcement that you want to share with everybody. Why don't you go ahead and do that now?
I do. So as you know, because you've been a part of this process, about 18 months ago, I created an online course that teaches this model that I've been using quite successfully to forecast the movements in Bitcoin. Now, initially, and I started selling that course last year in 24. I've had some success with it. I sold a few. I think I sold like 300-400 copies of the course, but then I stopped because I wasn't really comfortable with selling information. I mean, most of the stuff that I learned myself, it was either books or free education that I got over the years. So I started thinking, you know what? I don't want to charge for this course. Now the course is pretty good. I have to say it's about 9 hours in total. It teaches from zero to hero how my timing model works. Now, if anybody's wondering, you need to have some prior knowledge of how charts work, what a candlestick chart is, moving averages, trend lines, like some basic trading knowledge. But if you're there, if you're one of those people, you can go right now to my channel and watch the first 3 lessons of the course for free. The whole course is gonna be free. I'm just re-editing the other 6 lessons. It's 9 lessons in total. The first 3 is the theory behind how cycles work, how to track cycles, how to find them yourself in any market. I use a bunch of examples, mostly from crypto, I believe, because I made it a while back. The other 6 lessons, they're split into 2 sections. Lessons 4 through 6, we have TradFi. So I go through oil, gold, and the stock market. Make some actually cool predictions in the gold lesson that actually came out as exactly as predicted in I think that's lesson 6. The other 3 are crypto. And I also teach on the last section how to find specific cycles in crypto and the trading strategies that I myself use. Like, you're gonna know next time you and I speak, you're gonna know why I'm buying, why I'm selling, because I go into all of that in the last section of the course. Now, again, I'm only releasing the first 3 lessons now because I'm re-editing everything, the other 6. The reason I'm re-editing them is because I want them to be better. I want them to have more graphics, easier to understand, cut the videos in a different way, because I get into a lot of stuff in about 10 hours. On top of that, and this is for anybody who's asking, I do have a private Discord group. Now, the reason it's private is because it's for invitation only. You don't have to pay me anything. It's all free. I do a monthly AMA with the people in that Discord. I also share the forecasts from my timing model directly on that Discord, but I'm trying to grow it slowly. So if you want in on that group, you gotta send me a DM here on YouTube. You gotta ask. There's not gonna be a link anywhere where you can just click and join, because I don't want it to grow too quickly. But yeah, that's the announcement I want to make. I'm just starting to teach to anybody who's willing to listen. I'm very excited about that. So thanks for the shout out.
Okay, very, very cool. And that's thousands of dollars of value, guys. And so what you're suggesting is that people go to your YouTube channel,
Yeah,
subscribe to that now, and are the
yeah,
first 3 videos there, or are they going to be put up very, very shortly?
they're already there.
They're already
They
there.
I put them all there before you and I got a chance to speak, because I wanted to make that announcement. Yeah.
Okay, very, very cool. So what is your YouTube channel? How do people get to it?
So my YouTube channel is, you can look at my name, Juan M. Villaverde. That's we're gonna put a link in your description. I
Okay.
might change that name later, but for now it's just my personal YouTube channel. You're gonna know it's me because the icon is a little like a cycle wave with colors.
Okay.
That's how you're gonna know it's me. But we could just put the
We'll,
link to
we'll
the
put it
first
we'll put it in the
lesson.
description of this video for sure. Okay.
Yeah.
Well, that is very, very exciting. Cool, guys. I highly recommend you do that. That is a tremendous giveaway from Juan. And wow, and then so once you're there, there's also an opportunity. You just comment on one of those videos
Yeah.
and request an invitation for the Discord, and then you can get into the Discord and you'll be able to hear from Juan directly. That is very, very cool. All right, guys, greatly appreciated. You should make sure you go and do that. Before you do it, hit the like and subscribe button right here. If you're pretty excited about Juan's giving away his course for free, make sure you say so in the comments, and we'll see you guys soon. Take care.